We've talked about Dropbox in the past, Paul. Let's look at it one more time.
8.3 billion, 105 PE X, profit margin 7% X.
Pillar number 3 is revenue growth, Paul.
Revenue growth the last 5 years. Okay, 603, 844, 1.1, 1.4, 1.66.
That's pretty good.
And profit over the last few years, hate making money all day. Okay.
Well, their profit's going up, Paul.
Yeah, you're right. It's a check mark. You're right.
They're losing less money, so.
Number of shares outstanding, X. It's gone up.
How about assets over liabilities? Current assets over current liabilities.
1.33 versus 1.02. So about $300 million more than they need, which is good. Free cash flow. Who's ready? Your average free cash flow over the last 5 years, of the last 4 years, has been $300 million. They have a lot of growth potential. I'm seeing $6 billion as a value. Listen, overpriced, quote unquote. You got to understand where their stabilization is. Like how much of their free cash flow is being eaten up, their cash from operations, from growing. This actually might not be a bad deal. I thought this was gonna be terrible. It might not be awful. You got to understand how much of their expenses are advertising to grow versus stabilize, and what's their strategy long term. It actually might not be a terrible option on a company if you believe the growth is gonna be very large. The question is, how big is their market? Can they become a $5-10 billion revenue company? They're at 1.8 right now, and their gross margin is insanely high. And if they're spending a lot of money growing on advertising, you got to understand that by seeing what it would be stabilized. So they're always going to have advertising costs, but maybe they're aggressively spending money. They actually just turned a profit this year in the trailing 12 months. That's good. Let's see how many quarters of profit. Oh, man, look at that. 3 quarters in a row of profit. It's pretty solid, guys. You do that, $100 million. I mean, it's still a freaking high PE. 120 million. It's still a high PE, but the free cash flow number looks pretty solid. So maybe, I don't know why the PE and the free cash flow aren't lining up. That's the interesting part.